And now the third topic is a view from the top, creating new business value for BFSI Vision 2022. The panel speakers, I'm going to announce your names. Please come on stage. So the first panelist is Dr. Shreeraj Deshpande, Head Health Business, SBI General Insurance. We've got Major Ashish Ahuja, Chief Operating Officer, Fino Payments Bank. We have Vaibhav Joshi, co-founder and CEO, EasyPay. We've got Dr. Jasmin Gupta, co-founder and CEO, LXME. Mr. Ravindra Nagpurkar, CTO, Advanza. And our moderator for this evening, Mr. Subhrajit Mukhopadhyay, Executive Director, Edwell's Tokyo Life Insurance. So, Mr. Subhrajit, the tea was sizzling hot, wasn't it?
Yeah.
So, coffee or tea?
I would be looking for a tea after this session, actually, if you can.
Okay, tea. So just like the sizzling hot tea, let's go for the sizzling hot round. Okay, all the best. Huge round of applause for our panelists.
Thank you everyone. And thank you for staying till the last in the evening. I know it's difficult from get out of the andhari in the evening, so we'll keep it short so that at least you have a time to go back to your home. Today I have been joined by and a very illustrious panel, and I think they are all stalwarts in their own industries. And it's really proud to have you all here with us. Thanks a lot for being here. The topic today is creating new business value, a view from the top. Just to give a background a little bit, I think in mid-80s for the US and other Western market, and for us, mid-90s, I think everything around us was about financialization. So everything got financialized, and people were creating new ways to get things, how to create financial products around that. And that has quite a big uptake during this, up to I think the recession 2008, 2009. That's the period of the financialization of the entire ecosystem. And post that, and of course it started early also, post that it's all about technology. So technology is a part of our life and getting everything being dominated. So even the financialization also got that take inbuilt on that, and that continued to do that. While we are grappling and taking a lot of things from the technology, especially on the payment side, what I call that it has seen an exponential growth, especially in the last couple of years. During the COVID period, what we see that the growth is so exponential, sometimes the logarithm scale also might not work. We call it double log scale to make a linearity to get some comparisons out of that. Now we are talking about the Web3, and for this context, a DeFi is the way I think the people are looking out at that. Although the jury is still out on that, and I think the panelists will have some view on how the DeFi and everything is supported by the blockchain is evolving and how it's going to play out. I would definitely like to have some comment, but it's still in the future. Why I'm saying that? Because today's session is more about a little bit of crystal ball gazing, so that we need to see what's there. And I think who better than this great panel accompanying me to share some of their insight. So given the diverse nature of the panel, I will keep the question very simple and high level, but I want them to share their deep insights, how this particular segment is shaping up. So I'll start with Dr. Shreeraj. You and me share, I think, some commonality in terms of, although I'm from a life insurance, but he's from general insurance, but we are both coming from an insurance background. And insurance is all about risk management and so on and so forth. But before I get to that, given that technology is become an embedded part of our life, and you being an incumbent, how do you see these challenges playing out, and how do, from a people and work culture and the people and keeping the 40 millimeter, what are the culture you are trying to change when the technology is coming on board? You have to adopt technology. I don't think there is any way out. How do you ensuring that you're keeping your workforce motivated, trained, retrained, hiring, and how we are going to do that, if you can share?
Thank you, Subhrajit. Can hear me, I suppose. General insurance has been a business which is intermediary driven. Basically, a lot of agents, lot of intermediary driven. Pandemic came as a blessing actually for the general insurance sector. Before that, you could see that there was a lot of resistance for going into technology or digital means because the intermediaries didn't want to share their, their customers' data, etc. and all. And suddenly the pandemic came in and people were out of business. They still wanted to do business. So the adoption of technology even by intermediaries started in a very big way in those 2 years. And what happened was that it was not only the intermediaries, it is not only about procuring business, going direct to business, but it is how do you digitize the value chain of acquiring a customer to servicing a customer. So people were talking about, insurers did come out with a lot of, pre-inspection apps or survey apps, remote survey of vehicles, remote survey of, pre-inspection of, and still the adoption of this was also not there prior to what, the pandemic. But suddenly you started seeing that adoption started in a very big way. You started people using even for larger surveys, for fire surveys also. We saw that people, for the smaller size claims, etc., we were able to actually send the link and get surveys done because it was not very easy for people to move from district to district. And during those period of pandemic when lockdown were there, we still had a lot of fire claims which were there because those were unoccupied premises or where something is not working, the risk is high. So in a way, people started adopting to technology, people started adopting to, and they were forced to adopt, and it was, the company also started looking at people who are working from home, how do you give them digital means of looking at assessing risk, taking decisions on that. So everything started, and these 2 years would have helped us actually go ahead what we had not done for last 7 to 8 years. We were struggling to go ahead over these 2 years. Now we are seeing that what we see is that a customer-centric approach actually starts from the top. The organization's culture of customer centricity is the leadership. If the leadership drives customer-centric approach, I think it's going to happen. When your processes, everything is around the customer, I think that is what is going to happen. At the same time, we have seen insurtech companies coming in. We have seen the Accos, etc., who were totally digital coming in. So to start competing with this, the existing insurers also had to start changing their way of approach. So overall, we are seeing a very exciting phase now where people are going into transformations. Yes, as correctly said, people who are in the business for 8 or 10 years, cost of transformation is very high. Cost of retraining or skills training is very high. But it is happening, and that's the need of the hour. And we feel that, what we look at in the next 5 to 10 years is a lot of things which insurance used to have, that, making a change in the name of the policy, or some corrections in the policy, they have to go to the agent goes to the insurance company, passes an endorsement, Now things are becoming much simpler. The people who are coming to the later times or who have got the newer technology, they are giving it self-servicing to the customers for getting. So a lot of these things will start going ahead. Claims, traditionally it was that you will require the bills, receipts, everything, and the hard copy should be stamped and signed. Pandemic Yes, the regulator also learned something to allow the insurance companies to settle claims purely on digital copies. So today, insurance companies after 2 years are telling the regulator, now don't insist for the hard copies at all. We allow us to settle claims only on digital copies throughout. So this is coming in. This is where finally paperless journey. Today, insurance is also talking about, for example, for health insurance, we are talking about the regulator, the National Health Authority are talking about a platform, creating a platform which they already have for Ayushman Bharat schemes, where paperless transactions can happen between hospitals, insurance, and TPS. So now we are talking about why not even private insurance can transact over those platforms and make everything paperless. So I think things are changing. Insurance companies, some are adopting very fast. The younger ones are adopting very fast. The older ones are putting in a lot of efforts to adopt. But finally, there is no other way but to adopt to changing technologies.
Thank you. I think. Yeah, it's working. Thank you. I think definitely the tech has improved the convenience a huge way. Vaibhav, I think the point is also, it's about also beyond convenience and the customer delight and the digital payment systems. At least for my own experience, and I know everyone will agree with me, I think we don't hardly hold any cash nowadays. I don't know last time when I've been to the ATM, and this has completely revolutionized, especially in India, and I think you guys have done a great job on this. So what's next? What's the customer is looking for the next, and how do you see this playing out in the future?
Sure, thank you there. And before I jump on to the answer, let me ask a question to the audience. So when was the last time any of you actually went to a bank branch? And if you did, just raise your hand. So I think the answer is right there, right? None of us, other than the banker sitting over here who would have gone for a field visit or for some work, I don't think any of us in the recent past have actually gone to a bank branch. And that is, the answer lies right over there, that banking has digitized. Anything and everything that you want to do with banking, it is available within the comfort of your mobile phone. It can be through an app that your bank has provided, or it can be a third-party app, but your banking actually happens through that. Okay, I personally don't remember being a career banker myself. Of course, now I'm on the fintech side of things, but being a career banker, I don't remember when was the last time I visited a bank branch to carry out a banking transaction. Coming to payments, I think payments, India has been right there at the top, leader since the last decade, in fact. So 2014, 15 onwards, even before that, maybe I think 12 onwards is when we got onto this bandwagon of, urban business correspondent model, the way I like to call it, and then IMPS got introduced, and the way NFS came in prior to that, and the automation journey started. So since then, India has been right there on the top. UPI was Sone Pe Suhaga, and everything was suddenly digitized. I remember those days when success rate used to be in the 60s. So 60, 62%, 40% of IFPS transactions would fail. And my friend, Major would agree with me. 72 hours was the turnaround time for an IMPS transaction when it had failed to get the exact, to identify where the transaction would have failed and to rectify it. So that around, and we would have customers breathing down 72 hours. And eventually, the market came to realize that, okay, sir, IMPS transaction fail hua hai, 3 din mein paisa aa jayega. And that's how this journey started. And today, everyone is so much used to UPI. So much so that there is standing instructions on UPI. eNash has taken up all the mandates, auto mandates for your loans and stuff. And I think banking is also going the same way. The way payments has exploded in India. So the advent of payments bank, the advent of small finance bank, is a testimony to that. Okay, so look at, the penetration of the payments infrastructure to the length and breadth of the country, where you used to have this BC agents, now payment bank branches. You used to have this telco agents, again now payment bank branches, and then you used to have this NBFCs and microfinance institutions, geographically concentrated in area, and now they are SFB branches. Okay, and penetration has happened. All SFBs have also started digitizing their LOS and LMSs, and fintechs have, they have started integrating with fintechs. So not just from a distribution standpoint, also from the tech standpoint. So where, banks were used to doing this CBS system with the likes of, Oracles and the Infosys of the world. Today, they don't shy away from tying up with a small fintech for a LOS or a LMS system. And that itself has the answer, because what happens is, and I truly believe, and barring now, I'm sure a lot of you will have that, he's taking the name, but if a BharatPay can do it, then why can't State Bank of India do it? And State Bank of India has done that. We have seen the implementation of YONO. Kotak has done it. We have seen the implementation of 811. And now with, look at the way BOB is doing it, even after consolidation of 2-3 banks into BOB, the way Akhil is driving the digital strategy over there. Okay. If BharatPay can create its own homegrown LOS, LMS, and have what they claim to be 72 million merchants, okay, then I think for a PSU bank or a private bank, I don't think it's impossible. Over-reliance on the legacy systems has been an issue in the BFSI space in India. But having said that, that has been traditionally because our systems are very regulatory heavy systems. Okay, so anything and everything you want to do in the banking system, you have to get your PPAC, your process not approved through a plethora of committees. You have to get it, done in UAT, tested. Then you have to have a whole host of testing done, certifications done, and then you deploy it on a small scale, then a scale. And there we see that, dependency. But I think those scenarios are changing now. Agility is coming in, nimble-footedness is coming in. So even with the regulator making so many changes in the regulations, okay, I still feel that the convergence of a fintech and the licensed players is what is going to pave the way for the future. Not just for payments, but for liabilities, for assets, for the entire BFSI space as a whole.
Thanks, Vaibhav. I think that's a very interesting insight. Jasmin, you were working with the women in terms of empowering them, making them understand how to take informed financial choices. I think as a consumer, every consumer will go through these dilemmas and the problem statement. First of all, if for the sake of the producers and all of us sitting here and those who are there as well, can you articulate some of the dilemmas that are going through and help the producers to get some insights of some of the problem statement they should be working on actually?
Okay, sure. So, in fact, I wanted to tell the person who introduced us also, LXME is the name of the company. The pronunciation is Lakshmi. Okay, and Lakshmi is, we all know, stands for goddess of wealth, right? But when we take into consideration the relationship between women and wealth, I think since ages, we have seen that women as a segment have remained financially excluded all throughout. And hence, Lakshmi is a fintech company which is trying to bridge that gap. So we are building a neobank which is exclusively a digital bank for women, where all their financial needs are taken care of at a one-stop stop. So it is an investment platform. We have started offering investment products, and we are building the banking and the lending pieces as well, and trying to offer the entire ecosystem of financial products. And why we are doing this is because, of course, banking is since ages. We have financial institutions, we have banks, we have NBFCs. I think even then, the financial exclusion of women has been very predominant right from tier 1 to tier 5. So it's not something that is prevalent in tier 4, tier 5 cities. But I think tier 1 also women are excluded. And when we say excluded, it does not mean that they don't have a bank account. Just having a bank account does not mean that you are financially included. I think there is a lot required in terms of how are you handling finance. Most of the finance decisions by women are handled by the men of the families. So they themselves are not involved in managing their money. So there are a lot of reasons. So one reason is maybe they are not financially literate. So Lakshmi is doing a lot of gamified learning on the app. There is a community where a lot of boot camps happen, a lot of learning happens, and that's how women come up the curve. Because that is a safe space where they feel they can ask a lot of questions, they can learn about money, and then they can take charge of money and start making their investment decisions. So that's the whole concept. And the reason why we felt a need for doing this is because, of course, the exclusion levels are very high. And also, we did a survey early this year. And the statistics that came out were very shocking. It said that 78% of the women, they do not have access to any financial platform. They are not on any financial website. They are not using smartphones for any financial decisions. 56% of the women, even after a pandemic like Corona, don't have health insurance and life insurance. Yes, and these are shocking numbers because they may be having a bank account. If we look at the Jan Dhan initiative and the number of accounts that got opened, and now that we see the penetration, I think the number of accounts is not the problem. The problem is how do you manage those accounts? Are you using those accounts? Are you transacting those accounts? Are you making payments? Are you making investments? Are you going for insurance? Do you have credit availability? Now, credit access, 89% of the women they don't have credit access. So these were the statistics which actually made us realize there's a lot that we need to do in terms of simplification of finance for women. Because financial world is very complicated, and it's not necessary that everybody can do, take financial decisions easily. In fact, the financial literacy ratio also in India is very low. So for women, it is of course lower than 27%. So I think a lot of what we are doing in terms of financial literacy, in terms of making the entire experience very easy for women, I think, and another statistic that came up is, which said that 96% of the women, they want a financial platform which is dedicated exclusively for women. Yeah, so there is a need for something which is very simplified, which has products which are specifically curated for that target segment. And I think Lakshmi is trying to address that gap in the market. And of course, it's a huge market. I think half of the population of India is women, and if we look at, even if we impact, the 20 million women in next 2-3 years, I think we are making a big dent in this space, and that's the journey forward. Thank you.
Yeah, thanks. It's a great hearing you, actually, the way you guys are doing and this is, because I agree, because I've been for the last 25 years in the insurance. I know the at least from one lens we could see how the level of understanding, appreciation, requirement. So whenever we come up with a product, we see that what are the additionally you can do. We came up with a product, I just give you a flavor, with a joint life, where we always see that once it's the braid earner which should be insured, that's the way we see. But what happens after something happens to the braid earner? We have a product where the insurance automatically transfer to the spouse, because that's the time they become the whole soul of the family. And the taking them through this understanding of the financial nuances to take care of the family is extremely important. So great to hear that. Ashish, you have been in the payments bank industry for quite some time, and I think Vinu has done an awesome job. And given this lot of restrictions in terms of operations, and I think innovation was the only way that you guys had to survive. And I think you guys have done fabulously in terms of some of the innovations. What do you think are the opportunities and the pockets of growth in this space, the operating?
So thank you firstly for having me on this panel. Let me put it this way. At Fino, we've coined a term which we call the DTP model, and that's what the business model hinges on. And that stands for distribution, technology, and partnerships. And technology is the bedrock on which both the distribution side and the partnership side hinges on. So technology, the given, means in today's day and age. And if I was to, in terms of, yes, the payment bank license is a limited license, and it's not that we didn't know about it when we applied for it. So you get what you kind of go for. But life gives you lemons, you got to make lemonade. So within the ambit of the license, it is a question of creativity, it's a question of innovation, it's a question of thinking out of the box and trying to bring solutions to your own customer segment. It's not one size fits all. Largely, our business model hinges around servicing people who earn anywhere between about lakh and a half, to about 7 to 8 lakh rupees a year. So these are people who would, your guard outside your building, your auto driver, your cab driver, just to give example, your dhobi, nai, that's the kind of, that's my prime custom segment of our bank. If you look at RBI's annual report, 18.5 million banking points. Well, they didn't come up on their own, it's thanks to technology. Fino today has over 1 million banking points across. We started with some 400 branches, we are down to some 225 odd branches, which we call as trust points. So the only thing we expand is on our merchant point or our merchant partners, and that's all thanks to technology. The speed at which you can come up. I can vouch for anybody in this audience who would have taken less than a couple of days to open a bank account with whichever bank you would have opened it. I'm not talking of a digital banking account, talking of a normal banking account. We open a bank account in 4 minutes, over the counter, debit card, green pin generation. You could be sitting in Khardungla, you could be sitting in Kanyakumari, you could be sitting in Bhuj, or you could be sitting in the northeast of Doklam. Anywhere. How does that happen? It is primarily basis an innovation on technology using the India stack. And I think we have done a phenomenal job as a country. You look at the stack that UIDI provides you, look at the stack that NPCI provides you. And I think both of these organizations together, the India stack as we call it, if financial institutions leverage that, there is a huge amount of space for innovation. And if I look at it, we coined this term called human ATMs. Today, as a single bank, we have over 3 lakh micro ATMs deployed. The entire industry has 2 lakh ATMs. As a single bank, we have over 3 lakh micro ATMs. Now, question is whether you wanted to go the CapEx model and deploy only ATMs. We said if I have to take this right down to the tehsil, to the block, to the village level, in fact, the machine needs to be small. It needs to be a model where cash in and cash out can compensate for itself. So build a model where the merchant partner does products where cash comes in, as also has products where cash goes out. And the same thing nets off in the economy over there, and that's what we call our Cash Bazaar platform. And all this, the underlying, is entirely technology. If I look at our payment services business, over 150 clients today, over 3,500 crores of throughput on a monthly basis. If I look at our open banking platform, about 6,500 crores of throughput on a monthly basis, over 50 clients. Underlying technology. So my sense, this is all going towards more and more technology driven. Future, my sense, branches, way out. If you look at India and you compare it with any of the other nations, developed nations of the world in COVID times, Aadhaar-enabled payment systems has delivering today close to 35,000 crores on a monthly basis, seamlessly right down to the nook and corner of this country in the hinterland. Not another nation in this world can boast of this. This is all enabled basis utilization of an India stack in an innovative fashion and getting delivered. So that's the alternate channel of banking which has got today the trust of the customer, and hence I believe branches, to my mind, are out. Digitization is in a big, big way. It's not me and you sitting here aspiring to be on that app. Believe you me, you go down to the village, That kid may be dressed up differently, may behave differently, may speak differently, but his aspirations or her aspirations are very similar to the children, to our children who's probably sitting in this room, in terms of wanting to do banking in, or any app. Why only banking, gaming, whatever they want, the aspiration is the same. The faster you meet that aspiration in an innovative way and reach out faster to them, more sustainability. But with technology, I always say this, remember, your business models are also under threat. Profitability is always going to be under this thing, and especially a space like payments. It's a commodity out there now. And in a commodity, cashbacks can only work up to a tune. Deep pockets can only work up to a tune. So innovation and creativity in your thinking and reaching out to your customer is what's going to get you there. Thank you so much.
Yeah, absolutely. I think the might of the cash lasts up to a certain point of time. It has to be innovation. And talking about aspirations, I think you brought up a point of aspirations, and educations are, I think, synonymous in terms of getting a different level of educations. And I think you are able to catch that aspirations in terms of providing an aid towards education funding, and especially going beyond the conventional education funding. How do you see that playing out, and how do you see that, especially the technology and the fintech, and the way, how do you manage the risk, and how do you see the proliferation of this particular your initiatives goes?
Yeah, thank you for your question, and thanks for having me here. So yeah, I mean, as you rightly said, education has been evolving not just in terms of content, but in terms of distribution channels as well, right? Especially in the last 4 or 5 years, a lot of that has been digitized with the advent of EdTech. And with the advent of EdTech, what becomes critical is that your decision making has to be literally within seconds. So today, when a student wants to, avail a financial product from Advance for, let's say, a course with Byju's, that decision and financing distribution has to be done within seconds. Like 15 seconds is what our decision model right now works on. So I think the challenges in terms of EdTech definitely is turnaround times, because you've got a lot of competition in the market. You're sitting in front of your laptop and you're saying, I want to apply for a course. You don't want to wait for 30 minutes, forget a day or two for education loans. You want it to be done within seconds, and not just the decision, but the disbursal as well. So underlying all of this is just extreme tech, no doubt about that. I echo my colleagues' comments here that all of this is enabled only by tech. And I can break that down into, broadly 3 categories. One is identity, identity theft and identity-related security. At the bottom of that is, of course, UI, DAI, and NPCI that helps you ascertain a certain person's identity, not just based on their Aadhaar card or based on their banking statements, but you do a lot of other innovative tech like liveliness checks with the camera. You do assessment in terms of personality. So one is, of course, identity. The second is ensuring their credit worthiness. I mean, how do you make a decision within 10 seconds whether you give a person 2 lakh rupees loan or a 20 lakh rupee loan? So again, that credit assessment, risk assessment, I think that has evolved a lot in the last 5-6 years. Gone are the days when you only looked at a CIBIL score or NTC or a thin file or a thick file. We at Advance have been pioneering multiple layers of decision making when it comes to credit and risk, especially spending patterns. There's a host of integrations you can do and analyze spending patterns of a customer, and then make decisions based on not just your CIBIL score, but spending patterns, your social patterns as well. So a lot of innovation is happening also on the risk and credit side, and we are pioneering that for the EdTech partners as well. And then finally, of course, it's disbursal, right? You need that money within 15-20 seconds in the account. And all of that is made available primarily by NPCI and eNACH mandates that we register. I mean, we are seeing 60-70% growth every month in terms of people preferring eNACH as opposed to physical NACH. So I think technology basically will enable shortest time in terms of providing products. But not just that, a lot of innovation around products. So it's not just lending, right? We are building a BNPL specifically for education. So if you want to look at a laptop, let's say, how do you make a decision if a student should have a laptop with a mobile and a go to school kit? So all of those financial decisions are influenced by a lot of the social behavior that we track of every student. So I think in the coming times, there will be a lot of innovation, not just in terms of lending, but also the kind of products you see in the education space. And that innovation is completely driven by technology. How do you slice and dice, multiple products? There would be financial products as well, which will not be restricted just to lending, but also a good mix of virtual cards, which are time limited and with specific merchants that you can deal with in the education space. So I think those are exciting frontiers, and the only challenge with fintechs is, fintechs don't generally have a huge balance sheet to bank on. So, as it's popularly said, the banks are wanting to go the fintech way and the fintechs are wanting to go the banking way. But yeah, I think that's what the future is.
Thanks, Ravindra. I think it's a very interesting initiative you guys have taken, and I think the education is for any country. The education is a game changer. The more you can support multiple ways, the better it is. I have a quick question for Dr. Shreeraj. As an insurer, as your primary job is to risk management and manage the risk on behalf of your customers. At the same time, you also manage the risk that you are taking. So what is your current grapple? What are the new risks that is, from a consumer point of view also, what are the new risks the consumer should look out? And what are your grapples on the risk that is emerging? You are still not very sure how to manage that, especially from a non-life perspective.
Pandemic, which gave a lesson that nobody expected that something like this nature could come and could affect the insurers. Insurers landed up paying more than 25-30,000 crores of claims during that particular period. So if it also affected the economy in the same way. If
it also underscores the importance of having an insurance.
Absolutely. And it was not only the effect on the health of people getting affected, but it was also the lockdowns which resulted in the factories going off. A lot of problems for them, for the entire economy got affected. This also resulted insurance. For example, when we insure factories or fire businesses, we also have business interruptions policies. So there was, fortunately, Indian insurance industry was very clear that we don't cover business interruption due to non-material damage. That is, we cover only if there is fire, and because of a fire or a flood or a cyclone, there is a business interruption that was getting covered. India did not have products which talked about non-material damage. So if because of a pandemic, there is business interruption, there are severe losses to the industry, which in fact affected the economy in a big way. The Western world had it. They suffered much higher losses on that. But these are some things which we started grappling around and saying, how do we actually take care of all this? If there's a large pandemic, again, part two, something else comes up. How do you tackle such situations? How do you tackle situations in terms of, such risks which could come in terms of, which would affect, the industry sector or the employee sector, all. And above all this, again, we had a different, something which we still grapple. We are also there into the crop insurance business. The changing climatic scenarios, the changing, the entire thing, whatever, El Nino or whatever you call it, things which are keeping on changing. The way we used to assess risk earlier, everything has started going change. Rainy season, whenever it is to be a rainy season, will start in June. Today you see that they start in July, the entire calculation. So insurance depends upon last 10 years data, historical 10 years, 20 years data, and then you work on models or based on that. Our model started, we require to actually remodel everything and start working on things. So there's a lot of learnings which started coming in the near, and insurers are grappling to actually look at how to manage risks which are not known to us. Liability risk is something which is coming in a big way.
Thank you. I think we are running almost short of time. So I have one last question for the audience or for the panel. Since I'm having the pleasure of the panel, I'll keep it open. Anyone can respond to that. I said earlier that something about the Web3 and the DeFi. I know the jury is still out on that, but I would love to have some of your opinions on that. What's shaping up and which side you are leaning to? So anyone, please.
So I'll take it. I think, metaverse is becoming a reality. Let's face it. As far as DeFi is concerned, a lot of specific applications are getting created. Blockchain is coming up as a technology that BFSI is starting to look at. There was a time when blockchain, sheerly for its speed, was something that we would look away from, but today that barrier has been crossed. Okay, it is a testament. I have seen a couple of banks coming in metaverse space with small applications, so much so that just a year and a half back, with the bank that I was working for, we had a very and we were IPL sponsors. It was a small finance bank. So we created a small metaverse experience center, and we were sponsors for Chennai Super Kings. And you could just get in and experience the dressing room of CSK. Today, eventually, as we move on to a CBDC, these things will start becoming more and more real. When I say more and more real, the day is not far when we will have a virtual panel. Of course, we have had virtual panels during COVID, but we will have virtual panel in the metaverse. And the technology is so advanced, Web 3.0, that the realistic experience that it gives you is of a different level. I will tell you, I have experienced this firsthand. Okay, me and my partner, we were in a metaverse. So we took this, we were sitting, we were having a discussion, we were having over drinks, and I picked up my glass of beer, which was actually there. I brought it, and within that metaverse, within the virtual world, I could see that coming up, and then when I had a sip, I could see my virtual glass also had reduced the bubbles, the fizz, everything, and the guys who were sitting over there, and trust me, two of the guys were outside India. One of them was in Delhi, I was in Pune, my partner was in Pune. And it's not that, that was the first time I was in metaverse. I keep on going into various places because we do a lot of projects in metaverse. But I am telling you, the day is not far when it becomes the reality.
You are clearly on
absolutely
that
pro.
side.
Absolutely pro.
Any other views on the contrary side or some other things?
No, not on the contrary. In fact,
Just to supplement.
yeah. So interestingly, the barriers right now with the real world in the metaverse is only the interface. So I think while we are there in terms of experiencing what a metaverse might be, I think the future clearly is that your physical self will merge with your digital identity in the metaverse, in the sense that what you feel as a person physically when you go through, let's say, you're driving on US 1 from San Francisco to LA. That actual drive, BMW did a metaverse last month where you could actually feel physically how that drive went. So I think the real world and the metaverse will absolutely merge, where there's a lot of stuff happening in travel where you can literally feel you're somewhere else while you're sitting just in your office. So I think metaverse is definitely the future. The only challenge right now is the interface between the real world and the metaverse. And I think a company, Neuralink, which is again coincidentally founded by Elon Musk, is working exactly on that, where your thoughts can actually become things. So you don't even have to move your hand. I think they just recently did an experiment where if you thought of moving a mouse, the mouse just moved on its own. So I think those interfacing challenges that we face between devices and the metaverse is probably the frontier in terms of how much we'll experience the real self and the metaverse.
You would like to add? Yeah.
I don't think anything to add, but I think metaverse is so real. There's just the example Vaibhav was giving. I'm already thirsting for a glass of beer after this.
On that note, before I conclude, any questions audience have? Anything you would like to just quickly? 1, 2 quick questions. Then otherwise we can ask, give Ashish time to go back early home.
See, they won't be able to answer after the beer, huh? Just saying.
Yeah. Anyhow, thanks a lot. I think thanks a lot all of you for such a wonderful discussion and so insightful. At least for me today is a learning day. I think same with all of you. Thanks a lot for the organizing.
Yes, yes. Thank you so much. That was an amazing time.